Hello and welcome to the first edition of Capital Market Live from Channels Television. I'm Will Ibang. First things first, as always, let's check in on the markets. We begin with Europe, where markets climbed on Friday as investors digested key Eurozone inflation data and December's U.S. jobs report. The German DAX closed Friday higher by 1.2%. The UK's FTSE 100 rose 0.87%, while France's CAC 40 climbed by 1.47%. Inflation in the Eurozone dropped for a second consecutive month in December. Headline inflation, which includes food and energy costs, came at 9.2% year-on-year in December, according to preliminary data on Friday from the European Statistics Agency, Eurostat. Now to markets in Asia, where stocks traded mostly higher as the U.S. Federal Reserve signaled further rate hikes ahead. The Nikkei 225 in Japan rose 0.59% to close. Hong Kong's Hang Seng Index pared most of its gains and was slightly lower in its final hour of trade as China reportedly signaled more supportive measures for its property sector ahead. The Shanghai Composite gained 0.08% to close at 3,157 points, and the Shenzhen Component rose 0.32% to close. U.S. stocks advanced on Friday after December jobs reports and an economic activity survey showing signs that inflation may be cooling. This signals that the Federal Reserve's interest rate hikes are having their intended effect. The Dow Jones Industrial Average increased 2.13% to close at 33,630 points. The S&P 500 ended up 2.28% higher, while the Nasdaq Composite added about 2.6%. Friday's rally helped stocks end in positive territory for the week, which was the first of the year. The Dow and S&P 500 each closed the week up 1.5%. The Nasdaq advanced 1%. Now to a domestic market where equities kicked off the first trading day of the year positively. Pressure from profit-taking activities in the penultimate trading session now dragged the benchmark index lower. However, we saw the all-share index dipped by 0.7% week-on-week to close at 51,222 points. Sell-offs in Airtel Africa, Boa Cement, and Boa Foods, Nigerian breweries stocks drove the weekly loss. Now, year-to-date return for the index printed negative at about 0.1%. Now, if we look at the sector's activity levels, we saw the total volume traded declined by 51% week-on-week, while the total value traded increased by 43%. Except for the industrial goods index that we're seeing that declined, all other sectoral indexes posted gains for the week. Now, John Holt topped the gainers chart for the week, while Champion Breweries led the decliners. The trio of FBN Holdings, Boa Cement, and GTCO contributed 48.85% and 63.35% to the total volume and value traded in the week. Now, meanwhile, the NASD, that's the Unlisted Securities Exchange Index, closed the penultimate trading week in December negative. The NASD Securities Index rose by it closed positive, however, from the Securities Exchange. The all-share index was up 0.7%. The exchange gained 6.47 billion naira in value. However, the turnover was lower. We saw volume traded fell by over 97% to over 900,000 units, while value traded declined by about 32% to 116.29 million naira. CSCS, that's the Central Securities Clearing Center, topped the advancers list for this week, while Niger Delta Exploration Production led the losing stocks. At the same time, VFD Group and Friesland Campina Wamco were among top 5 stocks traded by volume for the week. Now, joining me to discuss activities in the capital market is Professor Uche Uwalike, Professor of Capital Markets at the Nasarawa State University and President, Association of Capital Market Academics of Nigeria. Good evening, Prof, and Happy New Year.
Thanks so much, Will. A very happy New Year to you and to our viewers as well. I must say that I'm honored to be your first guest on the first edition of your program.
It's good to have you, Prof. Prof, we've seen sort of like a weak start for the equities market kicking off January. We saw a bullish momentum entering, but the week kind of didn't give a desired result. What would you say are the causes or the factors behind this? Although we see the momentum in the market still strong, how would you rate or how would you say is the cause of this weak performance that we've just seen?
Well, I wouldn't describe it as weak in the sense that just as you rightly pointed out, the momentum is still there. If you like, carryover of the Santa Claus rally. We clearly had the Santa Claus rally this year. You know, I mentioned some time ago in this program that Santa Claus rally refers to the performance of the market in the last few trading days of the year, and in the first 2 trading days of the new year. So in December, we had Wednesday, Thursday, and Friday. That's after 25. And then we've also had first 2 trading days in January. So if you look at that, we had a straight gains all through. So clearly we had Santa Claus rally in 2022. And that is also dovetailing into what we are seeing in the week. If you also recall, the market opened on a positive note, and it's also closing on a positive note. For the 4 days of trading, it was only on Thursday that we saw the market plunge. And it was because the plunge was huge. That's why you now have a situation in which we are having negative return of about, I think it's about just 0.05 percent. Is clearly marginal. The momentum is still there. In terms of market breadth, we had more gainers than losers. Even in terms of sectoral performances, more gainers. So I would say the momentum has not really dropped. It was just on Thursday we had that minus 1.53% drop. Largely on account of sell-offs in Airtel and I think Boa Foods. Otherwise, you would say that yes, the general feeling of optimism, associated with a new year, is still there. And we also saw that in, even global markets. Global markets,
Prof, I just want to ask,
why prevalent in the U.S. market, in the Asia, and so that.
Okay, Prof, but why the sell-off in Airtel Africa? Because we saw the momentum, the buy interest in Airtel Africa. It was the last trading day or last trading week of December. Why do we see the sell-off in the first week of January? Why are people, dropping the stocks like hot potatoes?
Well, why do you have sell-offs? Yeah, it's purely a profit taking. That's what's happening when investors feel that a certain stocks has risen, to a particular level. Of course, you should expect that some others will want to take profit. So it's clearly a case of profit taking. Just as you rightly mentioned, Airtel is one stock that performed very well in 2022. Part of why it's now being made one of the stocks in the pension index. Okay, so I see that what is happening as profit taking when a stock has risen substantially high, and some investors feel at that point there is some bit of overvaluation taking place. Of course, they sell, to be able to take some profit. Airtel, I think, as we speak, is in excess of, is about it's closed at 1,550 naira. It's still the most expensive stock, in our markets today.
Okay, so talking about the index, you mentioned that Airtel coming to the pension index. We also saw some stocks leaving the NGX 30 index. We have Union Bank, Oando exiting that index. Boa Foods joining that index. What would you say are the criteria or the guidelines? Because we do know they do this biannually. What are the criteria, probably viewers want to know, that helps to rate these stocks, and then the reshuffling? What guides this reshuffling, Prof?
I think basically 2 factors, really. One is market capitalization, and the other one is liquidity. Liquidity in terms of volume and value of transactions, but essentially it's market cap. If you look at the first 30 companies, most capitalized companies, the first 30. The index that tracks them is the NGX 30, index. It's based on market cap. So when a company's market cap drops below the threshold, of course, it is taken out, just as we saw recently. The case of Owando and then Union Bank, leaving the NGX 30, and then in their place, of course, they will be displaced. In their place, you now have Boa Foods and I think Wema Bank, coming in. And again, don't forget that these are two stocks in particular, Wema Bank and Boa Foods, that posted very substantial gains in 2022. Wema Bank, for example, started the year at less than ₦1, and it's closing closed the year at I think ₦3.90. So it performed quite remarkably. And what is market cap? Market cap is a function of the price of a stock and the number of outstanding shares. So when the price of a stock is rising, you should expect that market price will also rise. So that's what happened in the case of Wema. It's also we also saw that in the case of Boa Foods. Remember that Boa Foods happens to be one of the major stocks that was listed only last year. I remember the two, in the primary market, the two major listings we had in 2022 were Boa Foods and the Geregu, you remember, the power company. And both of them, performed well. So Boa Foods entered the NGX 30 index on account of an increase in its market capitalization. I think for 2022, it gained over 60%. Boa Foods, closed at 65 naira. Per share.
Looking at the gains.
As of Friday, it was already selling at 69 naira. So what determines or the criteria, just as you said, is essentially market capitalization and of course, liquidity too. And so it wasn't just the NGX 30 index, that saw the rebalancing. As you rightly pointed out, the NGX rebalances every 6 months. It wasn't just the NGX index; other sectoral indices also witnessed, rebalancing. Talking about for example, the Lotus Islamic Index, pension index, and some others. And of course, this rebalancing helps investors in tracking the movement of share prices, and of course also in their portfolio management, particularly when you want to benchmark a particular index. You use those as part of the benchmarks for portfolio management purposes.
Prof, you're talking about performances of these companies. We know that 2022 was a tough year for most businesses listed on the exchange. We saw the stock market still ending on a strong note in 2022. What would you say are the factors responsible for this? I know you did do some crystal balling ahead of 2022 and you listed some factors, but would you say that you were spot on some of the projections you made?
Okay, essentially, the performance of the market in 2022, you can compartmentalize, essentially into 3 phases. The first one, happens to be the half year, January to June, when the market gained over 21%, 21.3%. So, what was the major factor that drove market performance in that, that period? In my view, favorable oil price, strong oil price, international crude oil price, because you noticed the oil and gas sector outperformed virtually all the other sectors. Even if you take the entire 2022 performance of the market, you discover that the oil and gas sector, printed over 34%, whereas the average for the market was 19.98. That's the average return, or share index. The oil and gas index, was posting as high as 34%. So favorable oil price largely contributed. And then, of course, the performance of companies too, a full year performance of companies for 2021 also, accounted for that. Then you also have the period between July and October, when the market actually dropped by as much as 5%. The market lost, I think, 5.39% during that period, basically the third quarter of 2022. And what was the major issue? In my view, the lagged effect, if you like, of the monetary policy tightening by the central bank. The central bank started tightening monetary policy in May of 2022 when it jacked up the monetary policy rate. So the lagged effect of that, we saw that in the third quarter of 2022 when, as I said, the All-Share Index, fell. So that was the major reason. And of course, on the back of, higher inflation rates as well, during that period. Then
Prof,
you have the last period between
Prof,
November and December, when the market again, there was resurgence in optimism, investors' optimism.
You basically gave...
What was responsible, you could also say, well, attempts by investors to prepare for year-end. Of course, fund managers usually try to prepare for year-end. And again, something that has not been established, I keep saying it, it's also possible that the announcement effect of the currency redesign may have had favorable impact on the, on the equities markets by way of, some liquidity filtering into the, the equities market. So that to me may have accounted for what we saw between November and December. But overall, I think our market is resilient. That's the despite all odds, the tightening, the high inflation rates, the market still outperformed.
Prof.
Most emerging economies. If you
Prof,
look at the MSCI,
we'll take a quick break now.
Emerging markets.
Prof, we'll take a quick break now.
The Morgan Stanley Capital for emerging markets that tracks.
Prof, we'll take a quick break now.
That tracks 24, markets, emerging markets.
Prof, we'll take a quick break now. We'll take a quick break now. Coming up still on the program is a look at capital markets' role in Nigeria's 2023 budget financing. That conversation right after the break. This is Capital Markets. Welcome back. If you've just joined us, this is Capital Market Live on Channels Television, and we've been reviewing activities of the capital market in the first trading week of January 2023. We're going to look at the budget which the president just signed and the huge gap, which is the deficit hole that it has created and the role the capital market plays in, bridging that gap. Professor Walike is still in our Abuja studio to discuss this. Professor, how implementable is this 2023 federal budget that was just signed by the president, especially in the view of the huge budget deficit?
How implementable? Maybe I should put back the question to you, Will. After listening to this analysis, you have a budget size of 21.8 trillion. That's the aggregate expenditure, 21.8 trillion. Now, out of that, the total revenue projection is about is 10.49 trillion. So you have a huge deficit of 11.3 trillion naira. Now, to put it in better perspective, you have a total revenue of 10.49 trillion, and out of that, you are going to, you're expected to, of course, there's a priority payment, and that priority payment is your debt service. Your debt service is 6.31 trillion. So if you remove 6.31 trillion from 10.49 trillion, now that gives about 4.2 trillion. That is what is left after paying your servicing your debt. Okay. Now, out of that 4.2 trillion, what is left is not enough. This amount that is left is not enough to even meet your total recurrent expenditure. Total recurrent expenditure is about 8.3 trillion. Okay. And out of that, you have 4.2 trillion for personnel cost. So what it means is that the revenue you have after paying debt, after servicing your debt, I'm not talking about the principal, after servicing your debt, is just enough to pay salaries. salaries of MDAs and salaries of government-owned staff of government-owned enterprises. And in total, the number we are talking about a number that is fewer than 2 million people, in these either MDS or government-owned enterprises. And we have a country of over 200 million people. So the whole money we have is just going to pay salaries of those the few people there. So that is not even enough to. I've not talked about overheads. I've not talked about pensions and other service-wide votes. Okay, so that tells you the state of our public finances. It's really quite. It's not something to cheer about. And if you talk about implementation is going to be difficult when you have this sort of situation. And that's why we're borrowing. That's why the borrowing amount is huge at over 11 trillion. And even out of that 11 trillion, the bulk of it, over 7 trillion, is coming from domestic borrowing with all these implications. Understandably so, because we, in terms of borrowing, there's a limit to which we can do now externally. Since Nigeria has been reclassified as a lower middle income country, it becomes difficult for us to access concessional funding. And that is why each time you now hear we borrow, we do international capital markets, we do Eurobonds. And Eurobonds are expensive. So government is now recognizing that it cannot continue to do commercial loans. And that's why it's now paying more emphasis on domestic borrowing. But again, it has its own implications. On the interest rate environment in 2023. Because as government borrows, interest rates are driven up. The private sector is crowded out, domestically. So to answer your question, the fiscal condition is not heartwarming at all. Given the fact that this budget, and expansionary budget, so to say, is going to be funded hugely, from loans. And even the revenue we are projecting, 10.49 trillion. Remember, about 2.29 is going to come from the oil sector. 22% of the projected revenue is coming from the oil revenue. And that is on the premise that the assumptions we have made, crystallize.
So does it hold any promise, Prof? Does it hold any promise for the capital market in 2023, this budget of transition, since it is a transition budget? Does it hold any promise for the capital market?
Yes, a budget will typically hold promise for the capital market if the capital component of the budget is implemented. We have a capital budget of 6.4 trillion. Okay, if that capital component, of course, is the borrowing we are making is used for capital, that is when you expect it to rub off positively on the capital market. And if you also take on what we have in the Finance Act, for example, the Finance Act of Finance, yes, it has been passed, 2022, where we are likely to also have an increase in the tertiary education tax from 2.5% to 3%. If you take all that, the totality of that, of all of that, including the fact that interest rates in 2023 is going to, will be high. Inflation rate in the budget is even projected at 17.16%. So all of that will create, a more difficult environment for businesses, in 2023. So the business environment for 2023 is not going to be easy at all, and of course that will impact the ability of companies to have earnings and pay their shareholders, and of course that way you see the pass-through to the capital market. So we hope that things improve. We hope, for example, that, again, remember that the budget is premised on the assumption that fuel subsidy will go by June, end of June. Okay, for me, that's the elephant in the room. Is it? The way the new administration handles that will go a long way to determine,
Prof, we're running out of time now,
economy,
Prof.
and whether investors will have confidence in the economy
We do
going forward.
hope that investors will have confidence in the capital markets, especially with what you're talking about, fuel subsidy being the elephant in the room. We'll have more room to discuss that, Professor Walike, Professor of Capital Markets, Nasarawa State University. Many thanks for your time this evening.
Thank you very much, Will. My pleasure.
And that's it on Capital Market. Do join us same time next week. Don't forget to watch this again on YouTube page, on our Channels Television. Also follow us on our other social media platforms to get updates. And Will Ibang is bye-bye for now.